Good afternoon to everyone. I'm hoping that you are having a very good day at this excellent forum, which brings together professionals from various walks of life. We are going to be today talking about a very, very interesting subject. And let me share with you that we seem to be living in interesting times. We've seen some landmark changes which have happened in the last couple of years, right? And I'm not just referring to either an Aksar Patel doing a 10-wicket haul in an innings this month. A plethora of changes have happened, and they've happened. They've probably been waiting to happen, and just got accelerated by the pandemic. We seem to somehow converge in all of these conversations on the pandemic. It just doesn't leave us. Well, it can't leave us. And it's part and parcel of our life now. So while we can blame for all the challenges and the benefits of doing a session like this, we can also benefit it with raising the bar on automation and bringing automation to all realms of life and changing the whole risk management dynamics for us. I have an eclectic panel, and I'm excited to engage with each one of them. And each you've heard have lots of risk management experience behind them. And we are going to be today talking about the future of risk management and the challenges and opportunities which is provided by this environment, which has been changing at a rapid pace. Okay, so on that note, let me start off by requesting Jasmeet. Jasmeet, if we can talk about what do you feel is your vision for risk management and its role in an organization from your point of view?
Okay, I think first of all, let me thank everyone for having me here, and thanks to the organizers, and thanks Sunder for asking this million-dollar question, which I think all of us keep worrying about, our visions and missions. So I think, I would rather start with a small analogy. I thought, that there's something which, we in general insurance sector, when we talk about cars and motor and, too many of, vehicles being driven across. So I thought, in fact, I was discussing just about a couple of days during a brainstorming session with one of my team members. And the guy is an ERM professional, and he gave me a very beautiful example, which I just recollect, and I thought that could be a good starting point. So, what he said is, sir, what is risk management, first of all? How do we really see a role of a CRO or a risk management team really shaping in? I mean, this is something which just got introduced a couple of decades ago when we thought of having a risk management, specific function per se. So we kind of, thought that probably the way I see it, probably look at a car, and the driver, of the car probably sitting on the front seat is your CEO who's blindfolded. There is an actuarial guy, who's sitting behind, looking at the rear mirror and actually telling you the overall, past historical data, enough data which he's got, and he's trying to analyze it and tell you that what could be the road ahead. And then there comes this new guy who's the CRO, who probably is made to sit on the front seat with open eyes, who's made to see the windscreen and actually see across and guide the, CEO in terms of how to navigate and actually reach the milestone. With the underwriters really pedaling the pedal with the speed to ensure that, we reach it on time and probably build, a big structure and create a profitability. But somewhere, the vision, I think, it's a very, very good starting point, which probably we see it. And we believe that still we are at a very nascent stage. And the risk management has to really evolve in a larger way to kind of actually take the real role of risk management, which has really grown drastically. But I think there is still a lot to be done. But I think it is very, very critical, and I'm very, very enthused to share that, the CEOs, the top management, the boards, the regulators, the corporate governance bodies, everybody is now talking risk and how do we handle the risk. So I think that's a very big achievement in itself. And I think the last 2 years have really blessed us to kind of introspect so much on risk management. And I think if we talk, we can have a couple of hours session actually on just talking the COVID experiences. But I thought this is something which is very critical and very crucial for any organization.
Thank you so much, Jasmeet, for putting that car driver auto perspective, on risk management. Rishi, can I request you to share your vision on what risk management and its role in an organization could be?
Yep. So thank you. First of all, good afternoon, everybody, and I'm glad to be a part of this session. Well, I would kind of resonate what I heard from Jasmeet on some of the aspects, but being at the realm of the finance function, my vision of risk management would be a paradigm shift, a shift from where it becomes a finance-oriented activity having 10, 20 steps performed during the course of the year, to actually becoming a part of the operations, the business, the decision making. That paradigm shift, fortunately, all said and done, this COVID has taught us to be absolutely be aware of this something called as risk. Otherwise, trust me, it was a presentation compulsory slide. From that, I think we have migrated to at least start talking about it. I'm glad that such forums are also talking about it. And it has a great opportunity and a potential, honestly. If we start talking about my vision, I would want it to become something which supports the business. It helps the business. Being risk averse is not probably the best way, though typically finance people like me like to believe that. But it's to live with the current risk, to manage the current risk. So that's where I kind of think that my vision would be, and its role in the organization should be such that it is able to add value in every single step or decision that the business takes.
Wonderful. Thank you so much, Rishi. From lip service to integration, I think very nicely put. Narendra, can we hear from you with your experience in banking? Where do you see your vision of risk management and its role in a bank? Narendra,
Good evening, all of you. I think I am excited and grateful to the organizers for being a part of this panel. So I am little influenced by Jasmeet's analogy. So if I can put it in a simple way, so whenever a personality like a sports person or a film personality, if somebody used to ask that, who is your best critic? I think they will say that somebody very close to them. For a player, he will say that his or her coach is the best critic, and the coach tells the sports person that what are his or her strengths and what are his vulnerabilities. And when somebody is playing and if it is the break time, they will tell that what are the challenges that are facing, that how to handle them better. So the risk management function should have a role, has a role like that, where it understands the strengths and the vulnerabilities of the organization as well as the challenges that they are likely to face, and prepares them to face them in the most efficient manner so that they can harness their strength and they achieve their goals without causing what would you say, that unforeseen consequences of not heeding those advices. So risk management is, if I can say in a very plain terms, that he is the friend's philosopher and guide for the organization. And to discharge that function, he needs to have the trust of the person that whom the risk management function is advising.
Very well said, Narendra. CRO as a coach, and coach is the best critic. And that's very succinct way of putting it across. Abhay, how would you describe your vision? Again with your extensive background in public sector banks and private sector banks, and now with National Bulk.
So at the outset, I would extend my heartiest thanks to the organizers to be having me on this particular conference. So as we know that the classical definition of the risk management is, everybody knows that the risk identification, quantification of the risk, and find out the trade-off between the risk and the return, and then the risk pricing and the risk transfers, and again, the reviewing, the monitoring, the risk strategies. But ever since the globalizations and the integration of the financial market has taken at a much frenetic speed now, the role of risk management has become much more paramount now. So the role of enterprises risk management, which takes into account the entire gamut of risk which the organization is facing, including the market risk, operation risk, and the liquidity risk, and the operation risk also. But so far, the credit risk part, if we talk about the Indian context or Indian financial market context, so we will see that the credit risk was the major reason for the problem which that has created to the financial players, including the banks and the NBFCs in Indian context. But if we talk about the globally, if we talk about the majorly, I think the problem has occurred because of the operational risk lapses, and also the correlation risk which has arising because of the market risk, thanks to our regulator that we were not dealing with the more complicated financial instruments. So that's why our risk was remain confined to the credit risk. But going forward, I feel the role of chief risk officer is basically more toward the operation side also. Merely having a CRO in the organization is not going to solve the problem unless the CRO is entrusted with the responsibility, is given the powers also. Not only he is involved in the drafting policies, because every banking sector, because the regulators have come for have already recommended so many strong measures to inculcate with regards to the risk mitigation practices, but that has to be implemented practically. If we talk about, if we learn from our Indian experiences, ever since the universal banking concept came, the problem started from there. Because these bankers being the short-term lenders, and they were having access to the short-term sources of funds, they had deployed the funds in the long-term uses, and that created the asset management mismatch, and which ultimately resulted in a huge pileup of NPAs. Thanks to the banking bankruptcy and insolvency code, now at least part of it, at least some good assets are being recovered. But I think going forward, the major challenges which the financial institutions and the non-financial is likely to come from the operational risk part. And because the cyber risk is going to play a major important role because of the integration of the financial market globally, and also the sophisticated IT related wherewithal which is being used for easy way of doing the banking transactions and the financial transaction. I think this is going to play an important role in days to come. So in addition to CRO, I think the Chief Information Security Officer's role is going to be a very important role in the futures to come. And because the growing interpretation of the financial services, and a lot of new players of NBFCs we have got in India, more than 10,000 registered NBFCs are there, more than 2,000 fintech companies are there. I think they are going to, if they are not controlled, or because they are somewhere interconnected with the bankings also, because their source of fund is also coming from the banks also. So the proper care with regards to the risk mitigation measures, I think regulators is coming in. Last couple of days we have seen that a lot of new regulations have come with regards to controlling the NBFCs, including the prompt corrective actions have been introduced for NBFCs, and also the different layer system have been introduced for MCs. So I'm going forward, the operational risk, cyber risk, and the correlation risk which needs to be prevented, because India being a banking oriented segment, because we don't have a mature bond market, so we largely still depend upon banking lines for augmenting our GDP.
Thank you. Very comprehensive perspective from the banking side, Abhay. Rajeev, I'll go last to you. Only fair, I thought, because we have two professionals from general insurance. So I'll go back. We start with insurance and go end with insurance. I'm also from insurance. So Rajeev, your vision.
Yeah. Thank you, Sunder, and thank you, organizers, for having me here. I think all the panelists have touched upon the critical areas. Let me put it very briefly. What I feel is that for any organization, business is the most critical element. If the business is not there, the organization is not going to survive. And the risk management has to be an enabler of that business. The business should see risk management as somebody whom they can look upon for some assistance in navigating, as I think it had been indicated by Jasmeet also. Because unless they trust the risk management, there will be a tendency for the risk to become just like audit, and people will be hesitant to open up. And therefore, it is very, very critical that the risk provides not just a vision or a view of the pitfalls, but also lends support towards the new risks that can be taken by the business so as to further the interest for which the company has been formed. So that is my point of view. At the same time, I think a very critical role is also to provide the assurance to the board, because ultimately they look upon the risk management to provide a very fair idea as to what are the positioning of the risk in the company. So that reporting element is also very, very critical. At the same time, one area is emerging risk. Now, generally, there is a tendency to go by, as was said earlier, the data, which mostly indicate as to how things have happened. There will be a need to prepare the functions to meet the emerging risks that may be coming up in some time, may not be at the surface right now. So that area also becomes very, very critical, where the risk management has to play a very productive role to see that the organization doesn't go into future without adequate preparation for those emerging risks.
Awesome, Rajeev. Thanks for bringing in that board perspective. Yes, corporate governance is the mantra we live by now. Corporate governance probably was getting lip service in the past, not anymore. It is getting serious attention thanks to professionals like all of us. Risk has come a long way, right? Clearly, which is coming out from the vision of all of you, senior risk professionals in the country. I would, and I'm glad to see that, it's not getting focused, at least in your visions, it's not getting focused into a slot, a box. And we are clearly thinking about risk, like Rishi put it in, across the enterprise, across every function. Think about it, if a risk management function, instead of it having, let's say, a few members, let's say it has 5 members in every function. Okay, and let's say, assuming a function has 50 people, and let's say if 10% of each function, has risk representatives, and risk permeates every function. A risk permeates the DNA of every function. I guess that's how we could go in and build a culture of risk, right? And that would probably be a good future. That would be a good future where all our organizations want to grow. We like growth, but growth has to be done with controls. So if risk can be something which can allow and maneuver growth with controls. So I think that was a very good inference which came out from each one of you. I found in the recent past that we as an industry in life insurance have been, and I think insurance and BFSI have been stepping up our ante on the use of data and analytics, right? And risk is all about measurement, and is all about putting a perspective of what could happen. You rightly said, Rajeev, it's not only about the past, or we can always do a good amount of audit and go back to the past, but it's also about predicting the future and spotting the opportunities in the future. Rishi, may I call upon you because you also manage the CFO function and IT. How do you envisage the use of data and analytics in probably something which we can call as risk intelligence? Any thoughts?
Yeah, sure, Sunder, I can share my thoughts on that. So I'll speak largely on the manufacturing side, because that's where my large experience has been. I would say that it's very, very low currently. Also, the understanding of the potential itself is pretty nascent. Yes, everybody understands the power of technology from a common sense perspective, so nobody disputes it. But when it comes to decision making in terms of spending money or resource on it, people are worried because you obviously don't get a payback when you look at something like that. So that's a maturity level that one would expect in times to come. Thanks to COVID, it's becoming more and more important to quantify. Though by and large, measuring of risk is a very big issue, honestly, and even the boards are asking, the risk management committees are asking that how do we know what you're doing is going to result into what, or what reduction in the risk? Please tell us in numerical terms, for example. So it's a challenge. One can do a 2x2, one by matrix, one can do a heat map, one can do various other things. But yes, we'll have to mature for all of us to understand in a proper way, and thus probably a resilience index is what I've been thinking so far. If we can look at how resilient the organization is towards the people risk, the process risk, largely the intrinsic risk, for which data exists, to be very frank. And that's where I think the use of technology can help to advise us as to where we stand currently in the graph. And then obviously a journey can be charted out to improve upon them. So starting with intrinsic is what I have on mind, largely because again data is available. Second is again to quantify it using the data. Reducing, yes, possibly the next logical step is to thereafter look at data mining or using of technology to actually reduce it. But we have to understand that in manufacturing world we deal with more people than machines. So in that space we'll have to also take its own time to mature on this trajectory.
Very interesting thoughts, Rishi. I totally agree with you. Risk management committees are pretty aggressive now on their ask on specific identification. So yeah, we are, and it's good, right? If that be so, that's good news for folks in the risk space and in the finance and the information security spaces. Because I heard it being mentioned that operational cyber are going to be very, very large areas of risk going forward, and if we can measure them, then we can monitor them. And if we can do that, then we can probably mitigate them. Rajeev, I'll come back to you. Any thoughts on how this is being done today in your space, and what do you see the future?
Now, coming to the data, I think general insurance, with which I have been associated, and most of my time has been as a sales person. What I see is in general insurance, we have always banked upon data. Now, the question, of course, is how was the quality of data? And we all know in general insurance, even now, the KYC is not mandatory. And therefore, the quality of the data that comes has certain issues. But as the digitization has happened, I think most of the companies today, if I see the Indian companies, they have moved very, very rapidly on this. And the decision has become more data-based decisions. Though frankly speaking, I always put the element of quality, that is human intervention, over the data, because the data sometimes do tend to indicate something which, if not moderated by the human experience, can lead to disastrous results as well. And therefore, going ahead, I think one challenge, of course, for me is going to be how we can clean the data, which can then be modeled and giving us the assistance, the managers, the assistance to take a decision on where to do business, where not to do business, how to do business. Though we have already initiated on that journey, but I think there's a long way to go where we can be assured of the data becoming such an important partner, where it actually provides you the wherewithal to take the decision. So I don't see that data was never there. It was always there. Now more and more things are becoming, earlier only actually was the data scientist in an insurance company. Now you have analytics as a function which has come up very strongly in all the insurance companies. At least that's what I know. So this is going to only further improve the quality of the inferences that can be drawn from the data churning that these data scientists will be doing. And going ahead, I think as government, I'm sure KYC will become mandatory even for general insurance. There will be certain other areas, but then the data privacy and other things are also going to come, which may have certain issues to be addressed as to how we are taking the consent and how we can use that data, to what extent we can use the data, and to how long we can use the data. So all those things are the challenges which we will have to address. But I think going ahead, the way things are moving, data is certainly going to play a much, much bigger role in providing the very critical insight for the function, which includes the risk function as well. Because today, we are also starved of the sufficient data to take any risk-based decision or to advise somebody on that, because there will always be some ifs and buts coming in the quality of data. So that is the challenge, but I am sure this is going to change very, very soon, and the change has already started.
Thank you, Rajeev, for that perspective. One big message which you bring across is the poor quality of customer data, which is available with us. And we have two bankers in the panel, thankfully. And you talked about KYC, so I will seek opinions from them. But before that, we've had a country which has also progressed in the path of embracing banking and mobility in a very, very fast pace in the last decade, right? Mobility probably much faster than banking. But banking did catch up with the introduction of Jan Dhan and, with so many central-driven schemes coming up, and banks also, trying to enhance credit across to the retail customer base. So, Narendra, what's your view on the perpetration of banking and its help and its role in enhancing customer data, which can be used by multiple sections of the industry? For example, CKYC is an amazing tool which is seldom used by anyone in the industry. At least, I know for life insurance, we are trying to, but and it's so simple and yet so difficult.
Yeah, thanks, Sunder, for asking that question to me. I think the KYC that Rajeev has mentioned about. So, if I can again go back to my earlier days as a banker. So, when we used to get a new customer into the bank, there was a requirement that an existing customer has to introduce him to the bank for him to open an account. So that means the KYC, the know your customer, being the prime starting point of a relationship between the bank. The banks were dependent on a customer to identify another customer for you. So let us look from there. And today, when we have authentic documents to identify a customer in a physical mode, then we have got avenues like digital KYC and video KYC, where the bank and the customer need not meet physically to get introduced as a customer. So there is a long way that we have traveled from where we didn't have any structured way of knowing our customer to a very digital way of onboarding a customer. This has happened because of the technology identifying the customer and also onboarding the customer without any physical interactions. And if that interaction would not have been available, so I think in the pandemic that we mentioned some time back, I think we would not have survived this pandemic if those interventions were not there. So that has been a major progress on identifying a customer in KYC. The other point in the banking, if I can make, that the 70% of the capital of the bank on as a ballpark number is apportioned towards mitigating credit risk. So in the credit risk, to assessing a customer, you need to know the credit history and the credit profile of the customer. Today, it has been very, very helpful to get the banks to know the customer's credit profile because of the use of the data. What has been his behavior with other banks in dealing with other products, that enables the bank to profile the customer, whether he is good for a particular amount, a particular structure, particular product. So that has been made possible only because of the use of the data and the availability of the data at a common platform where entire ecosystem can use. So unless these credit bureaus would have not been there, the scale up that we have done in case of retail growth of the retail loans in the banking industry would not have been possible, because banks were quite averse and very cautious in giving loans to the individuals because of the cost of maintaining that collection operations from the customers. Today, every customer is careful about his credit score. And that credit score is the one score which is available to the entire banking ecosystem. So similarly, when looking forward, I think when the banks are looking at the probability of default or running at risk, and when the banks need to make their capital planning by undertaking stress test in their portfolio to know that how much capital will be adequate to keep them solvent and run the business as planned. So these tools have the data has been the best tool in the hands of the bank to perform that role. Not only the banks learn from their own data, the publicly available data on the behavior of the particular classes of the customer and the product is made available to make those products available to a larger cross section of the people. Otherwise, what would have happened that if these analysis would not have been very, very incisive and very, very practical, probably the penetration of the banking services to the needy and the worthy people would have been very stunted. So I would say that the data plays a very large role in the risk management perspective, in understanding the customer, in understanding the credit profile of the customer, also planning for the capital by subjecting the bank's portfolio to the various type of risk through the stress testing framework to understand that how will the bank steer clear of the challenges built on those scenarios. So to that extent, I am saying that the data has played a very, very large role. Yes, we have we have many use cases to be developed from the use of the data. But I think the progress that we have made in last 2 decades is, I think we should all take cognizance of the usefulness of the data analytics in risk management.
Thank you, Narendra. Thank you so much for those insights on how we have progressed from the time when somebody would refer a customer and that was KYC to what we have today on the fly, on the flick of a wrist, with the credit bureau giving us validation of an individual and and topping it up with a credit score, right? So I think there is, but clearly there is a long way ahead. Given what Rajeev said, and I know it kind of gives me a peep into how we do it in life insurance. There is some amount of data analytics used pre-sale, during sale, and post-sale. So which I'm sure is done in most industries. And data does get utilized, and data analytics gets utilized in some way or the other. But it can only be good if the fundamentals are good, which is what Rajeev indicated. If the data is good, if the source of the data is good, if the quality of the data is good, then we can work on it. Else it is gigo, right? Jasmeet, what's been your experience in application of data towards managing risk?
So I think, obviously I concur with Rajeev because we are in the same industry and same challenges which we kind of come across every day. But I think if I see a decade ago and today, I see a paradigm shift in how data is being looked upon and how it has been actually used. So, just to give you an example, like we always had a concept of assisted intelligence. Now, assisted intelligence is more like data is probably there. You try to kind of, take out certain inclusions from it and probably take a conscious decision. Now, the way I'm seeing this paradigm shift in the GI industry, if I can comment specifically on, we are moving towards an augmented kind of intelligence. Now, typically you would be surprised if I kind of share this. I think we are in the business of claims. The biggest thing for us is what we sell is an assurance. And eventually, it's just a kind of piece of paper which is given with lakhs and millions of rupees commitment that in case if there is an eventuality, we come to rescue. Now, how do you really segregate between genuine customers, fraudsters? Because there is a large amount of frauds which today happen in this kind of an industry. And the industry is kind of struggling. Now, what we've done is, as an industry, I can tell you a couple of steps which have been taken. So IIB has come with, and created a database. Now, that database is not just for one insurance company. It's for the industry. Now, when you get the entire industry data together and you start churning it, I am sure the validations are going to blow up, and the benefit which you can accrue. Obviously, again, I think the quality of inputs will derive the quality of output. The better data as an insurance company we input into their system, the better analytics would kind of throw out. But still, I'm saying, whatever quality is right now getting in is far better than what we were in. Because earlier I was only seeing my data. So I am talking of a little different concept in terms of, while I would know a person has done fraud with me and he's trying to reattempt. But what about those customers? There are 25 insurance companies and there are 25 similar transactions he can do. Who catches him? There is no thread which kind of talks to each other. So touchwood, that thing is now coming. Industry is coming together. We've started fraud forums. GI Council is playing a very, very strong role in kind of fighting against fraud. III has started a new, course on investigations in terms of training the investigators. Because even the quality of investigators available in the market is unfortunately very average. So, there is a specific course on certification on fraud, kind of training investigations and stuff. So I think from all corners, if we kind of, fire, I'm sure the end result is going to be much, much better. And we'll have a better environment to take, autonomous intelligence decisions, I would say, where the, data would be able to take a lot of calls, then really bringing in a lot of, ifs and buts into play. But obviously that's a very far-fetched thought process. But I think it's very, very critical. And I think, we have to infuse, the thought process into our strategies that without data, I think it's something which is absolutely difficult to survive in today's world. I think this is what I can share.
Thank you, Jasmeet. Thank you for some very interesting thoughts. You talked about the ecosystem rather than data in the ecosystem rather than data within, each of our organizations as a unit. Spot on. There is a lot of work happening out there, and that's probably not only in the insurance industry, but many industries where there are distributed ledgers getting in place. People are benefiting out of blockchains, and customers are eventual beneficiaries. Because if frauds get detected or wrong sale is prevented, then automatically it will reduce the cost of the service, and companies will get more competitive in their pricing, and eventually the customer will benefit. So clearly, you're spot on. Abhay, while we spoke about KYC, with respect to banking, another area with respect to banking, which also finds its way whenever we speak about risk is AML. While the industry has done a lot of work, banking and the entire BFSI space has done a lot of work around AML. The ministry has done a lot of work around AML. What do you think is a future for prevention of money laundering?
So the future of money laundering, definitely the data will be required for that, and the data management system has to be streamlined in that particular perspective. So if we talk about the data management in case of banking segment, I think the artificial intelligence based on the rule-based artificial intelligence, definitely that is going to work, and that has started playing its role in that. But I feel that still in the AML segment, you can do it for classification purpose. But if you talk about in terms of giving the initial fillers or initial indicators, which can be probably the future fraud related indication, if that can give that kind of expertise or that kind of system which can be streamlined or can be developed, that is definitely going to be still it is a long way to reach to that particular level, because still I feel that the data, there is a huge data available, and that is why the huge data is available with the banking segment or with all the financial sectors also. But to give the study the past trend and also give the extrapolation of what it will happen in the future is little bit difficult task. In case of a normal credit risk, you can understand the credit behavior of a particular borrower, understand his industries, and also understand the nuances of the industry and the financial parameters. Based on that, one can give the projections about the future likelihood of the account going bad. But in case of so that's why that kind of a rule-based artificial intelligence that can be developed. But if you talk about developing a machine learning kind of segment, I think that is too difficult at this stage, and still the penetration level of that kind of technology development is still very low in the banking segment. And first of all, the regulator, because the machine learning will be acting mainly based on the deep learning basis, and there will be a chances that they can give a very different kind of results, which can again jeopardize the interests of the financial institutions. So a lot of data will be required, and a lot of understanding will be required, because in the financial segment there are a lot of different combinations of the permutation combinations are there to arrive at the specific parameters which gives rise to a particular which can give rise and also gives some proper indication that this particular account or this particular transactions definitely is going to convert into a fraudulent kind of activities. I think it's still at the early stage, and it will take some more time to mature to that level.
Thank you, Abhay. I think not many risk experts think from a customer's point of view. You talked about it from a customer's point of view. I can't use data to do something wrong to a customer, right? Customer interests come first, and of course, organizational interests, dovetail. So you had a very interesting way of putting that across.
Sunder, can I make a small point while on data?
Yeah.
I just thought, let me put this point. GI industry, or for that matter, insurance industry as such, we have been paying huge amount of claims. But when it comes to the perception of our customers and public at large, I don't see very high regards for insurance. Now, that is not because the claims are not paid, but perhaps the process of the claim which is there that actually puts the customer off. Now, I think the data which is going to be now used are already getting utilized, because I know of companies, including mine, that we have started paying claims through blockchain also. So this is certainly going to also improve the image of the insurance companies towards the customer, as to the money which is going to be paid has to be paid more gracefully where it has to be paid, and the fraudsters will again at the same time will be properly taken care of, because with the help of data, it would be easier and earlier to identify all those things. So that was, I thought, let me put it here.
Interesting thought, Rajeev. I have this image, or I would have to say, I have this version of utopia in my mind. Okay, and bear with me. Since I have a wide variety of people out here, I dare share it with all of you. Let's assume an environment where let's say the entire BFSI segment, for example, is collaborating. Okay, and for a moment, let us put data sharing aside, Information Act for a moment, let us put it aside, and say that God forbid there is loss of life to someone. Okay, and let's assume in the utopia that we are talking about, we have all debts registered centrally, all state government debts. I know that some 7 or 8 state governments today issue digital debt certificates, but let's assume that all of them are registered centrally, and they are available on call to all insurers and bankers and the VFSI segment, and the next of kin don't need to do anything. They just, death certificate happens, and there is this wide blockchain, and using that blockchain, every single policy which is live gets paid off, and next of kin is so happy. The banker is happy because the money is moved, and the account is no more inactive for a long period of time, not dormant for a long period of time. And the whole, there is so much productivity in the enterprise that the person who has lost life was possibly engaged in some enterprise. That enterprise does not suffer, because money has moved, and that enterprise also prospers. I mean, it's utopia, it's good to talk about, but at least, if you dream about it, I'm sure we'll reach there. Okay, that's the whole point. Speaking of dreams, if you were to be granted one wish as a risk professional, and considering some of us, we all concur that this is a maturing profession, but it's still a nascent profession. So given that as a background, if we were to be given, it's like one of those, I bless you with kind of thing. If you were to be given that one big wish by Providence, what would you wish for? And I would like to hear, and why, I would like to hear from each one of you. I just told you my wish. This is what I would like to wish for, and a couple of years when we had a CII forum on risk management, we were talking about it. So this is like a collation of thoughts from multiple folks, but it was something which got me mighty excited. So I'll turn the mic on to you, Narendra. If you want to start first, what is that one wish as a risk professional that you would want? If you were asked for.
Yeah. So I think, Sunder, you have put it in a very nice way about that utopian dream that if you coined it. But I think if you just look back, let's say 10 years back. So let us say the way UADI has come, Aadhaar has come. Okay. So Aadhaar has got so many use cases for the BFSI industry today. So we use this data to identify the customer, use that data, authenticating his payment, and so many use cases that we do. So I think we would not have imagined that such an instrument is available to the entire banking community today, and even for the larger BFSI ecosystem, to make use of that data and that unique store of the identification of a person. Okay. So similarly, I think you mentioned about death certificate, and probably I think there are many use cases that we can aspire to get it. So I think so the dream that you said, if a data is available at a common platform in a very clean and secure way, and the entire industry and the entire the customers can make use of that. I think that is something that I think everybody is putting their heads together to get there. The other thing I would say that from a wish list point of view, I think I would stress more on the risk culture. Although today I think there is a lot of appreciation about the role of risk, the importance of risk management to drive the organization in a very in a prudent manner to face all the kind of challenges, to harness the internal strengths. But the issue is that for making that, I think you need to make some sacrifices. Sacrifices in the sense that if you want to make your processes robust, if you want to make your policies transparent, you need to walk the talk. So see, the most of the frictions comes what is written on the paper and what is implemented on the ground. Today, it is good to put all the wishes and the objectives and the intent in a policy document. But if that policy or the strategy is not implemented on the ground, it is nothing but a paper of good intent. Nothing percolates down and nothing gets changed on the ground. So that is where I think in the banking parlance, the concept of the lines of defense comes. The first line of defense, which is facing the customer, acquiring them or servicing them, they need to understand that they, along with all the revenue targets, all the sales targets, top lines, bottom line, they also own the risk, and their performances should be based not only on the quantity that they bring in, also the quality of the income, the quality of the top line, and quality of the bottom line. And that is what has taught us in last 10 years when the Western world faced with the Lehman event. So today, although the risk consciousness, risk awareness has come in, but I think there is a lot of ground needs to be covered in translating that intent into action. So my wish list is that we should walk the talk when we talk about risk management.
Walk the talk. Thank you so much, Narendra. Abhay, moving on to you, what would be your wish list?
So I agree with what Mr. Narendra says, that the risk culture has to be developed and that is to be inculcated in the team across the board. And it should not be treated as risk, should not be considered as a stumbling block for doing the business. And it should not be the goal of the risk mitigation. It should not remain confined with the risk or risk CRO or the team who was dealing with in that risk management team. But it should be part of as a normal business requirement and which has to be accepted. And merely by drafting and defining the policy is not going to serve the purpose. Ultimately, it has to be implemented in ground and it has to be effectively controlled also. Because the dimension of the risk is also undergoing sea changes. You see that the entire gamut of activities or financial activities are undergoing tremendous changes, which requires the on and off streamlining those processes. So for that, the feedback is also required, because while sitting at the head offices, one cannot understand, because the nuances of the business ultimately at the grassroots level you need to understand. So you need to have a proper feedback, and that feedback will come from the line management or the people who are working at the field level. So I believe this is the role of the chief risk officer or the risk management team should be treated as a part of a normal risk acceptance. And management also, the top management should consider role of the risk is not merely just the requirement for the regulators or just to give the satisfactory reply to the investor that we have in place. A CRO position is there and we have a dedicated risk department. Ultimately, few people in the risk department cannot contain the different spectrum of the risk involved there. So that is what I feel, that across the company, across the organization, this culture has to be developed and that has to be inculcated and communicated effectively.
Thank you, Abhay. Rishi, I'll move across to you quickly. If you can share your vision. We've been speaking a lot about BFSI, and I can sense that you're getting, ignored. But typically, risk is, omnipresent, right? It's not the preserve of BFSI. So, it's typically all the more required to be risk savvy and risk intelligent on the shop floor, and in an organization like yours.
Yeah, so first of all, thanks for bringing a smile, posing that question to us. I saw everybody was smiling. So in this VUCA world, I think a smile is quite essential. I'm a greedy guy, so I'll ask for two wishes. And the first wish essentially would be to keep looking at risk as an opportunity. In the last 2 years, enough has been taught to us. We've all understood China plus one strategy. We've all understood how that can, especially in the automotive world, how it is benefiting a lot of suppliers. How exclusivity in supply chain can be a huge opportunity and a differentiating factor with customers. To how organizations have demonstrated their core strength in handling people, because of which they've been able to retain talent. So that's an opportunity that again got a lot of processes got stress tested in these times, which otherwise one would only do a simulation. So that's an opportunity. Similarly, a lot of processes or things or fundas or concepts that otherwise was on a paper, that got institutionalized. A small example can be putting artificial intelligence on the shop floor so that people who don't wear masks can be spotted. Now, that thought has now also got extended to safety. For example, if there are processes on the shop floor which are not being run in a proper safe environment, then the camera is able to sense it and it's able to raise a pre-alarm before an event happens. So this is something that has happened. We are living with it. I just hope that it continues the way it is in times to come, because it's a journey. It's going to take some time. The second wish that I think all of us also would mean is to leave a planet which is healthier for our children to live in. Environmental risk cannot be ignored. Yes, there is a lot of talks that happens on sustainability, but as corporations, we all need to start doing what's required, our bit, rather than just depending upon the government to do something about it. So that's a journey on sustainability that many organizations have begun, those who have that mature sense. But my wish would be for everybody to become conscious, make it a part of business sustainability, and start running that journey, so that at least our children on this planet are living in a healthier space than at least what we were born in. So those are the two wishes.
Noble thoughts, Rishi. Thank you so much. I'll come back quickly to my colleagues from Insurance, Jasmeet. If you could very quickly share your dream.
So I think, I'll quickly conclude. I understand, time-wise, we are really hard run. So quickly saying there are two wishes, like Rachel, even, I want to be greedy. One is probably a wish, which is a wish. I don't know it comes true, but as a kid, I would want, the Doraemon's future time machine, so that I can actually get in and see what is going to happen and I can take a call right away. But on the serious note, I think risk management is a culture, not a cult. It only works if everyone lives it. So my view is it is not to be practiced by a few high priests. It has to be like a blood flowing in every human being and being displayed and understood in the real perspective. And last but not the least, quickly, I would, for an insurance industry, which is very critical, which I would want to ask for is probably, today we fight anything and everything in IPC when we kind of have to fight for insurance. So I would want an Insurance Fraud Control Act or something called as insurance fraud bureaus, where it actually can, change the paradigm, the way the fraudsters today believe and see. And we really want to nab them by, on their head and not really, go back running after them. So I think quickly, that is what I thought I would share.
Thank you so much, Jasmeet. Rajeev, your wish.
Yeah, of course, people have talked about the culture. I think there is no denying the people are the most critical part of the entire risk management. So that is given, but I will not repeat that. What I would like as a wish, because coming from a GI industry, our major outgo is basically third-party claims. there has been some amendments in the Motor Vehicles Act. And my wish will be that all those provisions be implemented in the right spirit by not just police as well as the courts. Because if that is to happen, I'm sure the people who are the claimant today, they actually have to run pillar to post to get award in the MSCT courts, and with the lawyers fleecing them like anything. All those things can be really taken care of, and the needy who might have lost the breadwinner in the family will get the claims much faster and without any deductions on account of sharing by the advocates and all. So this is, I think, would be my wish.
Thank you so much, Rajeev, and that's a very interesting set of wishes. But if we were to cut across, and we clearly see that institutionalizing risk management, is what seems to be the aspiration. And right, it started off right at the when we talked about, each one of us talked about vision, we talked about data analytics, and now when we talk about what is our that one big cherished wish, the finger points over there. How do we institutionalize? Which means, how do we not make it a preserve of only maybe a data scientist? Maybe how do we not make it a preserve of only an ivory tower CRO and the risk management office? How do we permeate, bring risk into the DNA of the organization? How do we get people to think risk and take risk-based decisions? And how do we, on that note, maybe may I dare say, how do we build the foundation for a risk-intelligent India? Thank you very much, ladies and gentlemen.
Thank you so much, Mr. Natarajan. Well moderated. It was so superb to see all our eminent panelists. First of all, thank you for sticking on time. You've been fabulous, and every moment we've had with you on the screen definitely loaded with a lot of knowledge. So thank you once again, and thank you for being a part. Enjoy the rest of the evening.
Thank you.
Thank you. Thank you.
Thank you.